Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at the overall market, that is S&P 500, Nasdaq, then the tech stocks, that is Microsoft, Apple, Meta, Netflix, Google, and Amazon. Is this just the beginning of a massive crash that's we just gonna keep witnessing for days and weeks and for the years to come? Is this a big crash? Or can the market save itself? So we'll talk about everything from the lens of technicals, and we'll identify those levels and the zones and what the price action is telling us. And with that, I'll be also providing you future looking potential price action from here as well, that if those levels doesn't now break to the upside or we find resistance there, then things may continue to look much worse even through the rebounds, and things may just collapse. So let's take a look at all of that in this video. Now before that, I also want to show you my new bot that takes position both on the long and the short side. So market fell today, but my bot gave a really good catch into the rebound. So today was a buying position, profitable. This is on S&P 500. You can see we have now getting short plays as well. Again, my bot, this one now will give both the long and the short plays. And this is the data on the S&P 500 for the last 30 trades. Again, based off of the positions, right? Size, and this is on QQQ, that is Nasdaq. Again, if you need access to my tools, links are in the description below of this video. All right. So all in all, I'm happy with how things have turned out on the bot here. So let's now go back to our S&P 500. So starting off with that, now we have this today a crash, right? And Japan index fell across the board globally, sell-off is going on, but doesn't matter. And all the narratives that is being made around, oh, economic growth risk, oh, the job numbers are just, no, it doesn't matter, right? Like, they will make any narrative around the the news, the narrative, because back when the market was just going up and up and up, everyone was saying, oh, this market will continue to go up once, because Fed is just about to cut the rates, and that's why market is taking that into account. This is where this is back when S&P 500 was right over here. And everyone was saying, oh, this is because we see Fed cutting the rate soon, and market is taking that into already account, and that's why market is going up, right? So any narrative, right? Now they were like back then, oh, we need to increase unemployment more so that it's good for the overall market, and that's what is going to eventually happen, and that's why market is taking that into account and is going up. Now what happened? We are getting the same. We are now getting less. Well, I mean, more unemployment, less jobs creation. Well, so market should now continue to go up because the results are coming, right? What they were already taking into account. And right, so, oh, the rates will cut soon. Well, rates are cutting now, so why the market is falling? Because it doesn't matter. Market is falling, right? Because it doesn't matter. Why? Because what matters is the technicals, where the big players are moving their money, and the technicals helps us understand that. And that's why I trade with the technicals only. So why am I not worried? Yes, today's sell-off is quite a big crash, but why am I not worried? Because the trend was already bearish, and that's what I have been talking, that we are still in the bearish structure. And SPY, even from the last trading day, that is on Friday, it showed no sign of the bullish structure. Structure would have started to look a little bit better back again if it would have gotten above 530. Then only at some bullish strength would have again started to come. But since that never happened, we continued to remain lower highs, lower lows. Structure never gained to the upside, and we just, again, it's just a downside, right? So SPY actually losing this $524 level today, that's a huge problem on this, because that was a good structural potential area, and you can see rebound came back and is rejecting right underneath of that significant level, right? So 524, again, part of my indicator. If you need access to my tools that marks these levels automatically, links to my tools are in the description below of this video. Now the sell-off is continuing, right? And let's go to the hourly interval. So yeah, the structure is bearish, guys. There's no upside that I'm seeing right now. Can the rebound continue? That's another question, right? So the first leg of the rebound that my bot also gave up good buying position, that rebound is complete, guys. Now we are rejecting below 20 days moving average, sorry, 20 hours moving average. And not just that, we rejected underneath of that significant level, 524. We even opened below that, retested it, selling off again. Market is full on in the downtrend. Now from here, if market can get above 518 and also 20 hours moving average, then only some intraday a little bit like next more rebound may come. Otherwise, no, these are still the levels of rejection. Structure is still to the downside. So technically rebounds are still just being shorted. If that's your taste, if you want to trade the short, then wait for the rebounds at these levels and then see if the price action rejects and just short into it, right? Right now there's no bullish sign though, just telling you that is all is bearish here. So now the point that I also want to talk about, I'll be spending a little bit more time today on SPY, guys. So another point with QQQ as well I want to talk about is if SPY continues to fail to go above 524, that is a huge problem because this will eventually start to look like a head and shoulder, right? So this would start to look like a head and shoulder. And if SPY consolidates here but fails to go above 524 and consolidates, then if it breaks 200 days moving average, then guys, be prepared for the bigger drop. Yeah. So that's what I'm providing as future outlook as well in the price action, what may happen. Now with QQQ, similarly, we broke that, lost this zone, the area, and right around this zone of potentially a support that if QQQ would have held, that was it. But since we lost that, and structure was already bearish on this, so I'm not surprised. But we lost that level, so now we came back down to 200 days moving average, getting bought back a little bit there, but you can see it rejected underneath of that very level of one of the significant level 443. Right now, things are still bearish on QQQ, and just similar to SPY, guys, QQQ, if it fails to go above this level now for 448, then any rebound at this level, if it consolidates, head and shoulder pattern potentially may form. And if once now we break 200 days moving average fully after, if this rebound comes for with 448, then a big massive drop is just waiting to happen, right? And if I take you to the hourly interval as well, yeah, we are, yeah, still below rejecting 20 hours moving average. So nothing has really changed on QQQ as well. You can see we have been constantly rejecting below 200 hours moving average and still in the downward structure here on QQQ. So, and let's now talk about Microsoft. So if any rebound has to come, let it get above first 20 hours moving average on QQQ as well, right? And one of those significant levels above if it can do that. So Microsoft is also in a very dire situation now. This thing has lost 200 days moving average, and Microsoft hasn't lost this thing for what, more than a year, right? And this is a good correction. I'm gonna use this opportunity to buy in my dividend investing channel in portfolio. So March of the last year was when we were below 200 days moving average. And guys, speaking of my dividend investing channel, if you wanna follow along, please hit the subscribe and like here on this channel as well. Link to this channel is in the description below. And here I'm building my public facing portfolio on the dividend side, and I provide all the updates what I'm buying, and I'm taking this opportunity of market falling to buy more stuff, right? So that's that. Now, and yeah, so we on Microsoft are, guys, bearish, no questions asked, period. And losing 200 days moving average is a problem. Microsoft, if rebound comes, I would not bet more than 404. Until then, structure will still remain bearish on Microsoft. And taking a look at hourly interval, a little bit of a rebound. I'm pretty sure my bot would have given a rebound play today, profitable. Again, if you have you will have access to this new tool soon as well. So yeah, if you are interested to have access to this tool, join now, because otherwise price of memberships may go up because this is a new tool coming out. All right, so Microsoft tomorrow, if we get above 397 and 20 hours moving average, some rebound is possible again. Otherwise, no. But again, remember that 200 days moving average, which is sitting around, what was it, $404? Yeah. So until then, the structure overall, though, isn't just a downtrend, all right? Even after that, we'll have to see some level of more strength to see some any upside. Apple. So Apple at one point really was like so bad, fallen off the cliff. Let's go to the daily interval first. And with Apple, guys, the thing is that it found bounce and support well at the level of previous highs, right? So that was a significant level, at least to give it an intraday rebound and the bounce there. So we got that. But is this strong enough? Well, so now it's rejecting below 50 days moving average. You can see that at least intraday that bounce came, but that's fine. Now selling off at 50 days moving average, getting below this long-term holding trend line as well. Looks like it's looking situation is looking quite bad for Apple as well, in my opinion. I think, yeah, overall this may start to turn downside, but in trade it in, well, after such a massive volatility, trade it intraday only, I would say. But yeah, the structure is not looking good on Apple. Just want to say this. I want to see another day on this before I say more. But yeah, structure on this is not looking good. If I go to the hourly interval as well, you can see it's rejected below 20 hours moving average. All these rebounds as they come, you can see they're rejecting 20 hours moving average below, and Apple, well, technically until 214, that's where the most significant resistance was sitting. We are selling off there. Yeah, Apple may continue lower tomorrow if we stay below 206. If we get above that, I would wait for it to first get above 20 hours moving average as well. Otherwise, no. Stay away from it otherwise. Meta. So let's go to the daily interval. And Meta today is seeing some buying happening back, but just above 200 days moving average. This is such a choppy stock lately. But yeah, this thing does that when it is, so it can be argued if it's a distribution phase or not, right? But you can see on hourly interval a massive, sell-off, crash, however you want to call it, and that's bad, horrible. And yeah, right now, reject, if it continues to stay below 200 hours moving average now, the very level where it is at 475, tomorrow it can go down. If it get above it, some upside may come. Again, just trade with the level stop loss on the other side. It's a simple play, only intraday. I would not touch Meta swing. All right, let's take a look at Netflix now. So Netflix, as we already know, we lost that area of constant hold, like 623 area that I was talking about, right? We lost that zone, and then it's just been shattered, right? Like, so with Netflix, actually, let me adjust something here on my indicator real quick. And just want to see a couple of things. Yeah, here we go. That's fine. All right, so yeah, and now, well, guys, so technically it's in the downtrend. Netflix is bearish as long as we stay below 624. After this sell-off, there is a possibility of rebound, which we are getting today, but still selling off. Let's see if it finally breaks 200 days moving average as well. Try to find support there. But yeah, take profits in the extensions. This is the time to take profits on the swing or the short side. That the play I gave you a couple of days ago, break below those levels. And now it's all about, can this rebound continue? Well, for that, you first need to see it get above 20 hours moving average, and I would say also 597. Otherwise, no. Otherwise, this can continue to 579 again. All right, so Google. Remember, market already was selling off in the pre-market. It's just doing a little bit of a rebound and then selling off again. So Google, well, so we lost this level, 164, came back up there, resisted that, right? This is where we opened though, just above 200 days moving average. Structure is still to the downside. Google is not it's not even gonna look bullish even as long as structure stays below 164. It was already in the downtrend. Take profits in the extensions on the short side. Those were the plays on the swing structural side. And now the next big level would be if we lose 153 and 200 days moving average, then more downside. Right now there is no bullish structure. There are only two ways bullish structure can form. Either we see some consolidation and then break the level of 164 to the upside, then only. Otherwise, no. Otherwise, yeah, it's just next leg down. Amazon. So Amazon already post earnings sold off, and then today we went much lower, but getting bought back up. However, is this strong price action itself? No. We are still below 200 days moving average, and the structure is not bullish yet. Okay, can the rebound continue? So let's go to the hourly interval. And here we have, well, wow, still to the downside quite a lot. We watch the 20 hours moving average, right? If we can get above that, then some rebound may come to 171 maybe, but nothing more than that. But again, there's another level that 165 I would say, because look guys, we're in the downtrend. Trading rebounds are going to be tough. Today's rebound came, that's fine, right? We got one of the levels, came back to 20 hours moving average. Next I would say 165 and 65, since it's the only place I can say. If we get above that, then sure, 171. Otherwise, yeah. Otherwise, since we are in the downtrend, if we rejected 165 price action, if you see start to reject here, it will just continue lower, right? Accordingly, have a position stop loss on the other side, right? All right, that's it for this video, guys. And if you found it helpful, valuable, please hit the like, subscribe. If you need access to my tools, links on the description below. And with that, I'll see you in my next videos. Bye.